All right, I'll make a start and give you guys a bit of, so this is the agenda for our session right now. My goal is to keep everything under 60 minutes, and then if you guys wanna stick around and have a bit of Q&A, happy to do that, and we can finish with the Q&A. But yeah, essentially give you guys a bit of introduction about myself, walk you through what I do in terms of risk management and risk consulting in Sydney, and what are like the basic principles and frameworks we normally work with. I also have a bit of Kahoot Quiz kind of plan. So based on whatever I walk you through in risk management, I've put together a bit of quiz, not major, just 10 questions to kind of just jog everyone's memory about what we just did. And yeah, that'll be that. Also, my objective is to give you as relevant and as close to business world examples while going through our presentation. So yeah, that's my objective. And at any point, if you feel you need more clarification or just basic understanding something you didn't understand, drop it in the comment section if you want that, or you can just unmute yourself and ask me a question. So not a problem. And with that, I think let's make a start. And all right, so what's my story? Just like you all, I also graduated from SPJ, and I completed my bachelor's in BBA, specializing in finance. I graduated here in Sydney in 2019. And since then, I've been working with a company called Grant Thornton in their risk consulting team. And of course, I'm still in Sydney, a little bit far away from family. Haven't seen them in a while, but hopefully soon I can see them. And I'm hoping that you guys also can travel to Sydney if you are intending to, and meet you guys in person. A bit of about my hobbies and passions. I'm a big fan of watching stand-up comedy. Love watching movies, playing outdoor sports. Or a fun fact would be that I'm a licensed scuba diver. So really like the deep world of underwater world of diving. So that's a bit about myself. As you can see on the right, I have a bit of photos having fun in Sydney with my friends. So yeah, first up, you can see behind the bridge is a photo with my workmates, and then underneath is my photo with all my friends and roommates that I hang out with and live with. So yeah, that's about me. Next up, all right, let's get to it. What is risk? So as I said, I work in risk consulting, and I've been working with them for about 2 years. And this is just generally my idea of what risk is. And I'm just gonna give you guys a bit of background on that. So my understanding of risk is that any uncertainty that arises in the future can be classified as a risk. So with future, you actually encounter a lot of uncertainty, and that is what pretty much risk is. So it is uncertainty arising out of a future event that has not yet happened. And one thing to note is risk is actually present everywhere, and it is omnipresent, which means it's widespread and it is always there. So risk never can be eliminated. It can only be reduced or mitigated or avoided or accepted. So something to note is that when you think of risk, normally the notion is to think about risk in a very negative way, and which is fair because we tend to focus more on the negative events. But in all honesty, risk is also can also be positive, and we normally classify that as an opportunity. Yeah, that is that. So for the purpose of our conversation today and the session today, I would normally like to talk more about and focus more about the negative side of risk and what effects that brings in. So ideally, a risk event triggers mostly two kinds of effects, and they are kind of measured or assessed in the form of either a financial harm, a financial loss or a damage, or a reputational damage or harm. There are other effects that can happen, but I'm just broadly classifying them in those two brackets. Financial, again, is very tangible. You can measure it, easy. Reputational harm, on the other hand, is a bit intangible, harder to measure, harder to understand, but nevertheless, it is a very big, eminent risk that faces organizations. And I'm sure you all understand when I say reputational harm. A good example would be Facebook and how it has come back and rebranded itself as Meta. A part of my risk consulting brain also thinks in the sense that they've actually, this is a good risk mitigating strategy because of all the bad rep that they caught over the years. They've kind of rebranded themselves in the form of another brand, and that's good. That's interesting. So yeah, that's basically what it is. Moving on, I will talk about how we classify these risks. And broadly, my understanding is, I would say there are 4 classifications. The first one would be a strategic risk. Now, strategic risk example would be something, a risk event that, when triggered, will absolutely make it impossible for an organization to achieve its goal. For example, airline industry during COVID. So airline industry came to a standstill because when COVID hit, you had border restrictions, flights couldn't take off, and that is it's in itself a strategic risk that brought down the entire airline industry globally. So I would say that's a good example. Next up is operational risk. Now, that is risk arising out of the normal operation of a business, and the things and factors that are affecting it are people management, systems, your internal policies and procedures, and some of the other external factors that can also play a role. Good example of an operational risk would be in your organization, you've got systems, right? And some people are not allowed access to certain elements certain elements of the system or parts of the organization. So that is a good control by restricting access. However, a risk is somebody who is not supposed to have a certain level of access, have lower access rights, is given access to a confidential database that they shouldn't be having access. So that's an operational risk. Another operational risk would be a key person risk. For example, you've got a startup, right? You've got founders in a startup, and because it's a small team, many people carry with themselves subject matter expertise, and that becomes a key person risk. So something happens to these guys that can impact a business in a very strategic manner or an operational manner. So if it is impacting them in a strategic manner, then it will of course be classified as strategic risk. But if it's if you are critical to a function in an organization, then it will be classified as an operational risk. The third is compliance risk. I think a good example on this one is, you have to file your tax returns by a certain date, say 30th of June, and you fail to do that, and that has a consequence. And the consequence can be in the form of a penalty that you have to pay to the regulatory body. So yeah, that's a compliance risk. Organizations have to manage it. They can't shy from meeting compliance elements of their business. So that's definitely a key element of what I do in my role in risk consulting. I focus a lot on managing the operational risk and the compliance risk within organizations. And lastly, I have is investment risk. Investment risk is, the name itself is very clear, but to give you guys an example, cryptocurrency would be classified as an investment risk. Say you put your money in buying Ethereum or Bitcoin, and your outlook of the market is positive. However, due to some event, your investments tank and you lose money. So going into buying cryptocurrency, you have to be aware that yes, you have an upside and you have a downside, and that essentially is the risk. And managing that risk effectively would either yield you profits or losses. All right, next up is what is risk management. and that's where my role comes in the organization, when I'm trying to, work through things, devise plans and strategies of how to minimize an impact of a risk that the business faces. A simple definition is around minimizing, monitoring, and controlling the probability and impact of a negative event. And in doing so, you try to maximize the opportunity that comes along the way. The framework around all this is so it lies. It does not lie in isolation. It is a very integral. So the integral part of risk management would come with the three components that I have here, which is framework, culture, and governance. Now, framework would of course be established by the use of policies and procedures in an organization. Culture would be something that is driven by the management, and it also dictates how much risk are they willing to take and how much are they allowed to take. So your willingness and your ability comes in comes into play when you're talking about the culture. And lastly, you've got the governance risk. Governance risk is about, not risk, but the governance element of risk management is how are you forming a structure around managing these kind of risks. So you've got, your risk committees, you've got investment committees in an organization, you've got board of directors. This comprises the governance, and the layering of governance comes in, and this supports the framework overall. And that essentially is the risk management function in an organization. At this point, just like to throw it out open. Does anybody have any questions?
I have one.
Sorry? All good?
I have.
Yes, go ahead.
So basically, risk management main goal is to transform negative risk to positive.
No, I wouldn't say negative to positive. No, you actually can't do that. In our environment, if I go back, you've got, I've mentioned the VUCA slide here. So the VUCA image means the risk is there. So you've got negative risk and positive risks at all times. What you're trying to do is, with negative risk, you're trying to reduce the impact. And with positive risk, you're trying to enhance the impact. So you can't interchange or transfer each other, but with negative events, you just try to reduce the impact. And with positive events, you're just trying to make sure how can you leverage it better so that you make more money, essentially. And another thing I want to point out, so what is the need for risk management? And that stems from the basic fact that there are people out there in the world who are willing to pay you money in order to gain more certainty in how they function. This is why I get paid every month. This is literally why I get paid, because there is an inherent need amongst businesses to try and reduce the impact of negative risk. And as a result, they rely on expertise that my firm has to kind of look to structure and manage those kinds of risks that are always there better. Does that answer your question?
Yes.
All right, awesome. Cool. I will get to the next part. And this is around the risk management process. So you've got a diagram on your right. And so the first step here would be the first step is, of course, setting the objectives. Now, that starts and begins with the business plan, risk appetite, and risk tolerance. So an organization says to itself, look, what is the mission that I'm trying to achieve? And you lay it down as a mission statement. So this is the mission. These are the objectives I'm trying to achieve while in pursuit of that mission. And that's the first stage. The next one is detecting and identifying events that are going to impact these mission objectives, right? So you're trying to categorize the objectives that you have in the business and seeing what are the risk events around it. And you're trying to categorize those risks as operational risk, compliance risk, strategic risk, or financial risk. So for an airline industry, something like COVID, right, is absolutely a strategic risk. So normally they would actually call it a pandemic risk. And most organizations have something called a business continuity plan, a BCP. This is the lingo in the what we use professionally. So business continuity plan would actually have sections in them which would say, look, in the event of a global catastrophe, pandemic, or a natural calamity, these are the items, or this is the protocol that will get triggered. Now, unfortunately, the pandemic was too big. So it is a risk. It is too big a risk, but it is generally a very unlikely risk event that would have happened. So it did take everybody by surprise, and sometimes you just can't do anything because there are things that are outside your control. So yeah. So coming back to the second step, you're trying to detect and identify events or risks rather that are going to have an impact on your business objectives. So that's stage 2. The next one is assessing and prioritizing risk. So this is where something known as a risk matrix comes into play. So you're basically mapping out all the risks, and then on your vertical and horizontal axis, you're trying to rate their expected frequency and the expected severity. So it's likelihood and impact. You're trying to understand how often does this risk occur, and is this risk critical to my business? So yeah, that's basically the step number 3. And this is what my role in the organization is. So once we've assessed that, yes, you have XYZ as the risk impacting your business, what is the likelihood and what is the impact of it? So a lot of times impact can be measured in terms of monetary impact. Sorry. And that is what happens. And yeah, so the next one after that is selecting a risk response. So once you've mapped it out, you now go ahead and talk to yourself as to how do we address this risk, right? And that's where the strategy part comes in. You're trying to devise ways to reduce the impact and enhance an opportunity, so to say. Lastly, you've got control and monitor. That is around setting, your key result areas or indicators, so to say, to measure yourself against whether you were able to achieve the intended objective that you set in the first step correctly or not. So for example, control and monitor. How can you control this? To give you an example, you have this one. So yeah, systems in place. You can monitor using systems that you have in the organization, and that could be done by the IT. For example, a training module, right? When you are starting in a company, they often have to give you a training list of training modules that are very critical before you're onboarded. So you do those trainings. However, if somebody has not completed that training, and how do you track that? That gets tracked by a system which runs at the back end, which tells you, yes, this training is outstanding and this is not outstanding. And that essentially is a control mechanism that you can track whether you have achieved your objective of training your employee or not. So that's a good example of having a control mechanism in place. All right, I'll move on to the next one, which brings us to the slide around assessing and prioritizing risk. I think we've just slightly touched upon what this means. So again, to demonstrate my point, the color codes here are talking about the basically different risk severity and the impact of those risks. The one that you see on the top, right, the black ones that you see on here on top, this would absolutely, the top line over here, this would absolutely be something of a strategic risk where you've gotten the catastrophic text mentioning there. So this would be the absolute critical or absolute strategic risk that impact a business. Everything else would kind of fall in the bucket of either investment risk, or you've got operational risk or compliance risk. At this stage, has anybody got any questions? Am I going too fast or Is that all right?
No, that's good.
Yeah. All right. That is good. Cool. All right. This is the next part is the part that I kind of like, and it's more fun to give you guys examples here. So essentially, once you've identified risk, once you've mapped it out on a risk matrix, you now want to tackle each risk and find a solution for your client. And how you do that is using a response strategy. So generally, the way you would find these responses is in like this framework is basically based around 4 T's. So with risk, you can apply one of these 4 things and deal with a risk that is there. And the first one is tolerate. Another name for this one is accept. So tolerate or accept. This would essentially mean, and to give you an example, bad weather, right? So I like to play football. Now I know there's bad weather outside, but I still am a big avid football player. So I want to go out and play. So I say, look, listen, let's just do it. Let's just go and play football tonight. And I accept or tolerate the bad weather risk. That's the way I'm dealing with this risk, essentially. So I've not eliminated the risk. I am just saying, look, I'm aware of the risk and I'm willing to accept it. That's it. Simple. That's actually a strategy. That's it. Being aware and accepting it. The next one is treating the risk and treating or reducing the risk. So this is around, again, not eliminating, reducing. So treating the risk would involve adding more control. So once you're aware of what the risk is, you're saying, look, what can I do to reduce its impact? All right. So for a business like mine, when I'm in consulting, when pandemic hit, we literally switched to virtual. But the critical risk was around how do we communicate to clients? How do we reassure them that our ability to deliver the service will not be impacted? So what did we do? We, in order to give them comfort, we held Zoom calls. We absolutely made phone calls and said, look, this has happened. We understand you're under stress. Don't worry. We will still deliver on helping you whichever way we can. So you're basically trying to, here I'm trying to reduce the risk or tension that the client has by addressing, by communicating it more effectively. So that's a strategy. That's what I'm trying to do. Another way could be by adding more controls. So if in the organization, you have no way to track who is coming on a daily basis, as in who is present in the office today and who is not, like who's gone on leave and who's not gone on leave. What can you do to treat this risk? You essentially import like an online roll call system wherein you have to process your leads on an online system, and that's a control. So that online system will generate a report, and with that you can say, okay, this person, Kunal, for example, has taken 5 days leave this month, and I'm able to track that, and I'm able to then deduct that from his salary or things like that. So that's how you basically treating it, by inputting like an online software which tracks who is taking leave when. The third response strategy is transfer the risk, and the classic example is the insurance industry. If you've bought insurance ever, this is pretty much what the insurance industry is about. It is a response, it's a response of transferring the risk from yourself to another party. Another name for this strategy is called sharing. So sharing the risk and transferring the risk. Why do I say sharing? Because oftentimes what can happen is in an insurance, you can have an excess that you have to bear by yourself. And I'm sure you all have health insurances because you have your international students overseas. So part of that is, look, if something goes wrong, we have to foot the insurance company has to foot the bill of say $5,000. They will say, look, the first $300 is the excess and you will have to bear that. But essentially in doing so, what you are buying the insurance, you're transferring the risk of having to pay $5,000 and you're reducing it, right? So it is a mix of both. You're reducing the risk and you're sharing the risk in some ways. So yeah, that's the best example, I would say. Any kind of insurance is an element of transferring the risk over to another party. Lastly, we've got terminate or avoid, basically. That's the response. So terminating a risk and avoiding the risk would be, I talked about playing soccer or football outdoors in bad weather, right? I can just be like, look, it's too rainy. I don't think so I'll enjoy. So I'll cancel my plan. So I won't venture out in the night and drench myself. And that's the way I'm dealing with the risk. So that's how you just terminate your plan, and that's why you deal with it. Again, this is just my understanding. So these 4 categories and buckets that I have, this is generally speaking where we find a response strategy. But of course, there can be another lingo that you can find online or in your working ways, which can be another strategy. But broadly speaking, this is where it would fall in. At this stage, has anybody got any questions? Lovely. All right. The next part. The next is just around giving you guys more insight of what a risk management function in like an organization would look like, and what is the technical terms around it. So when I say risk management, pretty much everybody is doing risk management in some way or the other. The first, and in technical terms, we like to divide and segregate this as like a 3 lines of defense model. The first line is assumed to be the employees and the managers. So if you are in an organization and you are doing your job as you're supposed to, you also take care in making sure you're making no errors, right? You're making sure that there is no fraud being committed and things like that. So ultimately, the business is relying on your experience and your best judgment to manage the risk, right? If there is anything suspicious, your manager expects that you will bring it to their attention without it gets out of hand. So that is considered like the first line of defense. So you are the first line of defense in an organization as an employee. The second one would be a risk management and a compliance team. Now, within the organization, there is also oftentimes a separate function, which is often headed by the CRO, which is the Chief Risk Officer. And in there, you've got your legal team, you've got the compliance team, you've got the company secretarial team, essentially people who are looking at broader risks that impact the business on a daily basis. So as line 1, as an employee of line 1, you're not thinking about going to work, thinking about, hey, I'm going to mitigate risk. No, you're not doing that. Risk mitigation or risk management comes as a second nature to you in line 1. But if you're in line 2 or of an organization, you're ideally part of a team called risk and compliance. You're actively trying to assess the impact and likelihood of any kind of a risk event, and then taking actions in order to reduce that impact. And lastly, you've got the line 3. Line 3 is where, if you've heard the term internal audit or external audit comes in, and that is most times an independent function. But what I mean by independent is they are actually, so line 2 and line 3 are generally independent, but and what I mean by independent is they are not answerable to the CEO. Line 2 is not normally answerable to the CEO, they're answerable more to the shareholders. And so they will present their findings to the board of directors and so on and so forth. Coming back to line 3 is where I sit in, and that's where an external third party in an independent role, which is separate from the business, comes in, assesses the environment of the organization or business, and gives them like a certification saying, look, your control environment or your risk management environment in the organization is good, bad, this is where you can improve, and things like that. If you know about accounting, and if you know about annual audits that happen, annual financial audits, that's an element of line 3 defense, because the company is essentially getting a vote of confidence from a third party, an independent party, saying, look, our financial statements have been prepared in line with the highest standards, and we are not engaging in any kind of malpractice, and so forth. So that's where like the broader risk management function in an organization would come in. So yeah, that's pretty much it. The next slide is just a bit, I know it's a bit text, a lot of text on that, but just to, explain to you that there are a lot of benefits that come out of managing risk effectively in an organization. And oftentimes it is not easy to see, but it is in some way or the other helping grow the organization, helping the organization achieve its primary objective, the mission statement. And in doing so, you're reducing the impact of negative events. So yeah, that's pretty much what I had in terms of the risk management function, guys. At this stage, I just want to ask if anybody has any questions. And if so, happy to answer them. Yeah. All right. Yeah, feel free to drop a comment in there if you have any, right?
Yeah, we have a question in the comments. May I read it out?
Oh yes, please, because actually I can't see it. Oh.
Okay. Adil is asking, are risk management and the 3 lines in place only when there is a chance of risk, or any random times?
Oh yeah, so good one. So as I said, risk is always there. Something or the other is always impacting the business. Okay. It could be a small risk or a big risk. So no, they are always, so these functions are in the business. So line 1 and line 2 is normally there in every business. Line 2 comes in little bit later in a younger organization. So if you've got a very young startup, right, they are actually not going to focus on having line 2 there. And the reason is they just don't have the resources. I mean, you're trying to grow your business. Right now, your priority is bloody achieving the goal of growing the business and making money. And risk management is generally not considered like a core of business, like core function of a business. It comes as like a supporting structure while you're trying to achieve the business. So they're not always there, but line 1 is every time there. Line 1 is always there in the organization. But to add a layer and support, line 2 is introduced. And that generally you see in a mature organization. And the larger the organization, the larger the line 2 becomes. Line 2 would be, of course, headed by CRO, and they will have the legal team in there. They will consider elements of privacy, data, and things, and so on and so forth. So there is a lot of integration with IT that comes in at line 2, a lot of looking at what are the regulations out there, how is the regulation changing, how does that impact us, so on and so forth. So line 2 becomes a lot more prominent as the organization grows. And line 3 generally is there when an organization is quite big and it has a lot of stakeholders and it is responsible for a lot of stakeholders. So for a public company, line 3 becomes a very important element, because the general public wants reassurance and assurance that an organization this big is able to effectively manage its risk and is achieving its objectives in line with what they've said. Does that answer the question? All right. Can you help me read other questions? What are some of the other questions that I have there?
Can I ask one?
Yes, go ahead, please.
Hi, Kunal. Nikhil here. Actually, I would want to hear from you. What is some of the best risk management story or incident that you have heard, that you have come across? It could be yours, or it could be anything in general, like something we can resonate with.
Oh, that's true. So I would say this boils down to how I'll give you an example of what I've done in an organization, and that would pretty much address how we dealt with it. So for example, I was doing this review for an insurance company in Australia. Now they're not a big insurer, but they are a team of like 6 people, okay? And in insurance, there is something called an underwriting manager. Now, underwriting manager is someone who, in simple terms, is accepting the risk. So when you're buying an insurance policy, somebody at the end of the insurer is saying, look, this is Kunal, this is his age. Say you're buying health insurance, right? So they look at my age, they look at my previous history of medical history, and then they say, like, I am willing to accept Kunal as a risk. So they say, I am willing to accept Kunal's risk of insuring him, and I'm willing to give him a $1 million policy of health insurance with so-and-so premium. Now, in the organization that I was doing the review for, this underwriting manager had a very critical role, right? And from my understanding, we felt that his role is absolutely critical to the business. And because it's a small team, right, anything that happens to him can put the business at a standstill. So had a chat with this guy, had a chat with the CRO, explained them our point of view, where we're coming from. And look, in some cases, you just have to accept that there is a key person risk, right? So what we branded this as was a key person risk, because this underwriting manager in the business was absolutely critical. However, because it's a small business, they can't, of course, hire too many people in that same role. So we accepted the risk. That was the first way of dealing with it, because the part of my role is identifying the risk and then letting the management know. And then we work with the management and decide how to deal around that risk. So once they said, look, we can't hire anybody, then my brain went and thought as to how can we reduce the impact of this risk. If you think about it, this is a key person. He's got a lot of responsibilities. Wouldn't it be great if we train somebody else in the organization to help him out or to understand his role better? So that if he's gonna leave, or God forbid he dies, the business can still function and somebody else can take over the reins and run the role that he was supposed to run. So pretty much that's what we suggested after that. And then we went around, established some training modules that the other staff members can actually do, things like that. And you're essentially trying to mitigate the impact afterwards. But this all happens in conjunction with and back and forth with the management. You're not just giving your opinion as a consultant and expecting the business to, accept it. You work with them, you understand where they're coming from. Of course, they have budget constraints. They don't want to hire somebody. Maybe there's not enough work. So you go back and forth, and then you achieve a middle ground, and that's how you deal. So that, as I would say, would be a good example of how we, fun example of dealing with the risk. And yeah, cool story.
Thank you for that.
Yeah, just to add up on this, it's an amazing example. So in this particular situation, this risk would be either strategic or operational. One, he's so important. Both
this I would say. So I would call this a strategic risk, because what we found in discussing about this risk is this is an individual who is in Australia. So he's built relationships with other brokers, insurance companies, reinsurers. So he's the one who actively goes and meets stakeholders and engages with these partners, right? Because that's critical to his role. Now, if something happened to him, absolutely, there is nobody else in the organization who has, like, these stakeholders, other stakeholders and partners have met. So I determined that this is quite a strategic risk. And my goal was to bring the strategic element of the risk down to an operational risk. You understand? And the moment it becomes operational is when there are other people in the organization who also understand better what an underwriting manager in the insurance company does. And the stakeholders or the other partners that are there of this business have met few other individuals from the organization. So it's not just that they're relying on the underwriting manager to do the entire job of building rapport and relationship, but there are other people who are also part of that. So that's pretty much how we, yeah. So I would say it's a strategic risk, but we were trying to get it down to an operational risk because again, it's a risk that I can't eliminate. And yeah, I had to just reduce the impact of that.
I think, yeah, that's an amazing example.
Thank
Josh.
you. Let me just read out the comments here. All right, that's it, right? There's no other comments, right? Cool. All right. With this, I have something of a fun activity. Let's see if we can do this right now. So I would just urge if everyone can just switch on their, go on to Kahoot. Don't know if everybody's familiar with Kahoot, but that's where I'm going to put the pin to kind of log in. So Kahoot, is everybody familiar with Kahoot, you guys? I'm gonna share the link actually.
I mean, we fourth year students are Kahoot crackheads. We love Kahoot so much.
Oh, perfect. Because I know I was, we had professors who did Kahoot all the time with us. So I love it too. Great to hear that same thing's being done. All right, I'm just gonna bring up my screen with Kahoot in there. All right. Can you guys see the Kahoot pin?
Yes.
All right, easy. Yeah, I've just prepared a quiz around everything that we've discussed, right? Just trying to cover the basics ahead of what we did, and I think the quiz kind of helps contextualizing a lot of the conversation we just had. Yeah, so it is good element of questions, guys. I mean, I would say it's a, yeah, don't be disheartened if you don't get it right, but it'll be fun to see who comes out on top. So let me know if everybody's on there and I can hit that goal. Hit that goal. I just realized a very good risk, good example of a good risk is while I was trying to prep for this session, I was thinking as to, hey, what happens if my internet connection drops down? So I was like, oh, that's actually a risk. So what did I do? I made sure, like, you know, I've got a backup, I've got my phone's data plan around, so I can just switch immediately. So these are just like basic things. So if you think about it, risk is there around us all the time. And we do subconsciously deal with risk on a very frequent basis. But I think what my role in the company is just do it with more structure and, you know, some framework in mind. And that is literally why I get paid. Yeah. All right. So we've got 18 things here.
Maybe 5 more people from this call itself can join. Who, like, guys, who,
Okay.
let's wait for 30 more seconds. Whoever hasn't joined can please do so right away.
Yeah, great, man. Lovely. Let's see. I'm excited to see how did you guys absorb that information.
I mean, there's Yatharth, who I don't see has joined.
Yeah.
Loka, are you there? Maybe we can start now.
Yeah, we can make a start. Okay, someone's coming in. All right, I'll wait for another minute or so. So are you guys all pretty much like studying from home right now? Okay, nice.
No, at the campus.
You're at the campus?
Yes.
Okay, so that's I'm guessing Dubai.
Yes.
All right, guys. I'll make a start and yeah, let's do. So you've got a 30-second timer. You have to be a bit quick. There are 4 options. Yeah, it can get tricky. So go for it. Good luck. All right. Good one, guys. Yeah, it is operational risk. Generally, an organization will tackle operational risk by just having more guidance by the help of policies and procedures. It can literally be something which you can take as a guidance. Yeah, so policies and procedures, definitely you can address that by classifying that as an operational risk. Cool. Next one. All right, we've got Aryan. All right, good one. Let's go. Next. I'm hoping both people to get this correct. There you go. I think that was pretty straightforward. Good one, guys. Pretty clear about that one, aren't we? All right, so no change in the scoreboard. Aryan is still leading, but Joshua has made the entry in the top 3 and Raghav too. So all right, we've got 8 more questions to go. Let's see. Oh, amazing. Solid. There you go. Let's see who's joined us in the top 3 now. Oh, Raghav's dropped down. Jonathan has come back up. Interesting. Who's got up 3 places? Loka is the highest climber. Nice. It's always interesting how it plays out in this. All right, lovely. I think that one was a clear winner in terms of understanding the concept of a risk matrix. We still have Aryan leading. All right, guys, it's time to challenge him and climb up the ladder. But Joshua has maintained its place, second. And combo breaker, 3 places dropped there, answer streak of 3. All right, somebody slipped. That's okay. We've got Vamika entering the 3rd position in the leaderboard. Nice. Nice. Yes, you guys are correct. Yeah, so no, typically as in it's always the case, a risk officer because, as I said, his role is slightly more independent of the business. That means he's not going to report to the CEO, because CEO is part of the integral business. He's actually going to report to somebody else who sits on top of the CEO, which is the board of directors. So a chief risk officer will often present the findings or the key issues or the key risks that are impacting the business, going to impact the business in the near future, straight up to the board of directors. And board of directors are someone who are actually appointed, if you think of it, appointed by the shareholders. So the board of directors are going to provide the oversight as to what are the risks that are impacting the business and how can we manage that. So they will tell the CEO as to, hey, look, this risk is being, this needs to be addressed as explained by the chief risk officer. So that's when the CEO will actively chase and address that kind of a risk. So yes, you're right. They will report directly to the board of directors, CRO. Somebody just stole the first position. Joshua, good one. All right, let's go have a sixth question. There you go. Yeah, internal auditors are actually the third line of defense. Risk and compliance officers, line 2 defense, yes. And for those 11 of you who said employees and managers, yes, the first line of defense is essentially the employees. So yeah, the organization is relying on your experience, credibility, and knowledge to mitigate or at least identify and alert the business if there is any risk that comes in. Look, I can imagine that it can become hard to sometimes envision this, but just think of it that this is going to be a reality. If you are looking to work in a corporate environment, it's soon going to be a reality for a lot of you, that you will come across these terms and these industry terms of 3 lines of defense and things like that. So yeah, good, well done. All right, Aryan has a streak, so he is trying to catch up fast and regain his position. But we have Srinidhi joining us in third. Vamika is at fourth, and I don't know how to say that fifth name, but good one. Five seconds, guys. Come on. All right. Yeah, this is a tricky one. Correct. Again, elimination of risk. Gotta remind you all, you cannot eliminate a risk. You can reduce the risk impact, but you can't eliminate the risk. Eliminate means you just remove, you can't remove a risk. The risk is always there. As I said from the beginning, you can't eliminate the risk. So I am a bit disappointed on that one. Yeah, you can't eliminate risk. But for those of you who got that correct, that is one of the benefits of a risk management process, that look, ultimately you're trying to refine your and make your business more efficient. And in doing so, what you're trying to do is enhance the impact, reduce the impact of negative events, enhance the impact of positive events, and ultimately take a decision of as to where should you put your money. If because everything is around, there is a time value of money for everything. So yeah, efficient allocation of capital is a benefit of risk management process. All right, so Srinidhi has come to the top. Nice. Manvi, on the other hand, is the highest climber. Nice. That's good to know. Good job. All right, 3 more questions to go, guys. 5 seconds. Quick. All right, good job. Yeah, correct. Slowing down the decision making process. All others are actually tangible costs. That's why you are bound to get that as an incorrect response on this one. But yeah, intangible costs, you can't see it, but it does happen. So risk management, you of course got so many layers. You know, you have to get it approved, you have to go back and forth, figure out with the client. The client has to invest time in something that is not a core operation or expertise that he's doing. So there is a lot of time that is spent in organization and in a business to just manage the risk, and that is reflected in the most intangible way that you can think of, and that it essentially slows the entire decision-making process down, because there are so many stakeholders. You've got to get approval and so on and so forth. So yeah, good job, these 9 people. All right, good job here. All right, let's go. Next one. All right, perfect. I think that speaks for itself. 12 of you got this correct. Yeah, it's not an operational risk. It depends, actually. This one's funny, but I think I should have clarified this one. It's more from the point of view of an investment type of firm. Because in a normal firm, you won't actually have, so to say, rogue trading protocols. Like in a normal, coffee shop business, you won't have trading platforms. If you've got a bakery, you can't really do trading. So even in that case, it becomes an investment risk. However, for an investment company, this can be treated as an operational risk, but just for the purpose of this, this question, I think we'll stick to calling it the investment risk. Yeah, I know that was tricky, but we've seen change in leaderboard. All right, I think this is the last one, so bring it home. Five seconds, guys. All right, sorry, I was reading the comments. Yeah, so for this one, using agents and third parties, correct. That's the correct answer. That does increase the compliance risk, because sometimes the part of that compliance element is you're also engaging internal auditors and external auditors to gain reassurance on the internal processes that are happening in the business. So that does that is treated as external parties, and use of agents, that they increase the cost, the risk of organization compliance risk. Because what is essentially happening is you're giving your internal company information to somebody else outside of the organization, and you can have a breach of data, you can have breach of privacy of your clients if you are in that kind of business. So it does increase that kind of risk. All right, let's see who's the victor for this one. Great. Amazing. Good start, guys. All right, so good job, you three. Lovely, enjoyed it. Yeah, at this stage, that's pretty much it from me. I will bring you guys back to the slides, and yeah, all I want to say is yeah, this brings us to the end of the session, and thank you all for being so patient and sticking around. Let me know, this time is just open for anybody. If you have any questions or anything that you want to ask me, anything, even if it's not related to bloody like, work or the risk management part of things, I'm pretty fine sticking around having a conversation. Otherwise, if you have got plans, feel free to jump off the call. That's fine. Had a great time with you guys, so good luck. But yeah, you can connect with me on LinkedIn if you want. If you're gonna have any questions about coming to Australia, working in Australia, things like that, let me know. Happy to help. Yeah. So, but at this stage, yeah, open to questions, guys.
Hi, okay, I had a question. Firstly, thank you so much for taking the time to speak with us today. I really appreciate it. And this is such a relevant topic given the COVID situation. Like, people have invested so much in risk in the last couple of years. So my question is like a yes or no question. Do you think that a CRM certification is necessary, appreciated, or good to do, especially in the Australian context?
Sorry, CRM is client relationship management.
Sorry, what was it?
FRM.
FRM, sorry, yeah.
FRM. Oh, all right.
Yes.
So look, there are certain no. So FRM is very specific to banking and the credit side of things. So if you're trying to enter that element of banking, the banking world predominantly, not even investment space. For investment, you've got CFA. Banking, a lot of it boils down to FRM, doing FRM course. But yeah, so I mean, if you're trying to say is it relevant, it's absolutely relevant in the context of the industry you're trying to get into. If you want to be in finance, or if you want to be very specifically and in a niche area, you should. I think FRM is a good course to do. Yeah.
Thank you. Okay.
But yeah, it will come down to what you really want to do. So yeah, there are other courses out there that you can actually do. If you don't want to, right now in your career, just be very specific and very niche in an area, that's fine. You can take your time. And FRM is a professional certification. So you should definitely get some work experience, and then take a call whether that is something that is relevant to the industry you're part of, and take it from there.
Got it. Thank you.
I would say at this stage, I mean, you guys can just like unmute yourself and have a conversation with me. Yeah, Aryan, go for it.
Yeah. My question was regarding the CFA program, like the level 1. And I think most of us are preparing for that, for the one which comes in this month.
Lovely.
And
I'm talking about CFA, man. Actually, I'm writing level 2 this month itself. But yeah, go for it. What's the question?
Yeah, so I think I'm writing level 1 on the 17th of November. And my question is regarding, so at this point, I don't have a lot of experience because over the summer, I just spent myself learning for this course, and I did something else. I tried to do, extra credits for the previous years. So when it comes to finance, I don't have that much of experience. So moving on with a CFA level 1 or something, like, is it harder to penetrate into, getting a position of a job, or do you really need experience as you on the get-go? And is CFA level 1 any use, or do I have to wait for a level 2 or something?
I would say, look, to answer the fact that is it of use, absolutely. Like if that is the space you want to enter, it's the gold standard. It's a tough exam, so prepare well, and it is very much relevant. But again, depends on the industry. And with regards to work experience, yes, look, when I started, I didn't have work experience, so you do need a bit more. You really need to sell yourself when you are there in interviews to be able to demonstrate that, look, I've done CFA, I'm eager. But at the same time, what people normally value is work experience. So CFA is good to have. It will be more of a a side or a cool point to score with your employer when you're having a conversation or an interview. That look, I'm also interested in CFA. And look, I've already done, or I'm writing level 1 this summer. But I think the value of CFA goes up much more once you have relevant work experience, because a lot of it, what you study in CFA is it's quite practical, but there is more context that comes with when you work in the industry yourself. You're able to really connect the dots better. You're able to understand, look, the investment risk, this is how you deal with it, these are the strategies, and so on and so forth. So yeah, I mean, it's perfectly normal for you to knock on the door of employers and be like, look, I don't have experience right now, but this is my enthusiasm, and this is CFA is one of the reasons, one of the things that I think is going to sustain my interest in the field of investment management, so to say. So yeah, it's good to have that. But yeah, keep looking for opportunities though. Work experience is absolutely critical for a market like Australia. I think people here value work experience over certification. So it depends again on market. If you talk about India or the US, post-grad CFA absolutely is a good tag to have. But at the same time, I think ultimately everybody, what people care about is, hey, can you do the job for me? That's it. Certification and all is just like will get you in there, but it helps if you have work experience in this area as well. So yeah, keep at it.
Yeah, thank you very much.
So what else are you guys doing on a Saturday afternoon and things like that?
I think people have their midterm breaks right now. It's the end of the midterm break, so everyone's just taking it slow and relaxing before classes start again next week.
Okay, that's cool.
Yeah. How are things in Australia? What are you up to?
Look, we just got out of a 4-month lockdown, but it was hard. We had a surge of cases, but now most people are vaccinated, so it's good. Australia is nice, great weather. I absolutely love it. It's a good work culture. I have to say that I am a big fan of the work culture here. It's very chill. People understand the importance of a balance. Like you work 5 days and you chill, and yeah, it's exciting because it's very linear. Also, there's no lot of hierarchy, or people aren't always calling each other sir or ma'am or things like that. It's very flat in some manners of speaking. So I love it. But yeah, it's a good market to be part of. Good lifestyle. I absolutely can't complain about that. So yeah, if you guys are looking to come in,
yeah, I think a few of us on this call are waiting for Australia to open so they can enter. Any idea when Australia will open?
Man, who cares about what Kunal thinks at this stage? I think all of us are just eager to go back home and see families, and I think everybody is just sick of Australia not opening because just doesn't seem fair. It's just bizarre. Like for 2 years you lock the country down. That's very weird. But no, I don't know, man. Can't say. I'm definitely hopeful it's going to open in 2022, but it's already too far away in my view. They should have opened up, if not today, yesterday. You know what I mean? They should have already opened up. Like they're losing international students. They're losing manpower. The biggest problem right now that is Australia facing is a shortage of labor, because no immigrants are allowed, no visa holders are allowed, no students are allowed. So businesses are struggling, literally struggling. There's a huge shortage in consulting space, accounting space, professional services firms to find skilled labor, and I think they've called it upon themselves in this case because they've just shut the borders for so long. And that is something that I think businesses are struggling because they're like, look, we're at the mercy of the government here. We just can't seem to fill. We need almost about 500 positions to be filled in organizations, in like an organization called like PwC, but there's no way we can do it. So yeah, they are struggling. And yeah, I think when you guys do come in, be on the lookout. I think it's a great place to be adventurous, to be enterprising, and meet people, and strike connections on LinkedIn, meet for a coffee. It's a very clean, fun environment, work environment in this sense. So yeah, if you guys planning on coming, having those plans, I think absolutely.
Yeah, hey Kunal, I had another follow-up question if you don't mind.
Go
So,
for it.
so now looking at the CFA program, and you're pursuing a career in risk and analyzing and finding areas where there can be issues. Now, when you look at asset management and stuff, how do you actually break into those analyst roles, or how do you develop yourself away from an experience or something? Because that's like
Yeah. Look, I'll tell you my journey. I wanted to absolutely get into, asset management. These are like fancy words, right? Like it sounds cool. You want to be an analyst for, say, Goldman Sachs or something like that. But to be honest, game's unfair, because as visa holders, right? If you're in Australia, you'll be on visa, and these roles are not open to us. They have a very clear disclaimer saying, look, investment analyst role, firstly, they will ask for 3 years or 5 years of work ex. Okay? So we mostly, you won't have that. So if you are able to come in and apply for a graduate program, the problem comes in that they have it restricted to only PRs or citizens. So it is an unfair game in that sense, that you are going to struggle finding somebody to interview you on those accounts. So that's what you have to do is go for smaller firms, smaller asset management companies and things like that, consulting firms, wherein you build a structure, build your portfolio, do your CFA on the side. That's what I'm trying to do, and be in the business. Okay, so if you want to be in the professional, like if you want to be in investment space, do something around that. If not, if you can't do exactly that, do something around it. So work for an accounting firm. I'm not saying do accounting, because I didn't want to do that. But my job is, in some ways, a lot of my clients are wealth management firms, investment firms, financial institutions, so banks and insurance companies. So I'm very close to understanding the CFA element of things, which is what happens, in an organization like an investment firm. But you slowly have to build your portfolio, keep your network open, and I think there are opportunities. There are few of us who have been able to break in, but you have to really stand out or know someone. And I absolutely feel it's fine if you know someone, you're able to use that connection, please do it. It's no shame to admit, if you can. But yeah, it's hard. So you gotta build your portfolio. You gotta work in tangentially close areas if you can, and build yourself from there. And that's true for any institution, for any industry. Even if you're like marketing students or like entrepreneurship students, it's hard to, like I found it hard to know what I want to do. But once you're in the market, like once you're doing something, you get a better idea of, hey, look, I want to take my career here, or I want to do this, and I don't like this. And that you only get once you start working in an industry. So yeah, I think being rather than being on sidelines and not working, it's good to take up any role early on which you get and build from there.
It's an amazing discussion. Yeah, I think that if anybody else has a question, Josh. I'm good. Everyone's fine. Yeah, Srinati, yes.
I have a question.
Yes.
So I just wanted to ask, how do you think the job market looks for students that are just graduating next year? And so when we come straight to Sydney, we're probably just going to be looking for jobs as soon as we graduate. And you said that they're looking for, workforce labor with big shortage right now. So do you think that provides us an opportunity?
Hot. One word, hot. The word is hot. The job market's fucking hot. And it's just, you just have to. And the problem we faced was there weren't enough opportunities. The problem you guys will face is, how do you distinguish yourself? Like, how do you stand out? All of a sudden it won't just be you, there'll also be other immigrants or skilled people who are going to come in, because once borders open, if you want to fill a vacancy, the best way is not to hire maybe a student, but somebody who's got 3 years of work ex, is maybe in Philippines or in Singapore. Fly them over, give them a sponsorship, and so forth. So definitely work on what is your value add, like, but I understand it's hard to argue as to what your value add is, because we've just studied for 4 years, and we've got like 3 months of internship here and there. So yeah, it is a hard one to answer, but I think it boils down to how enterprising you can be, how you can stand out, and you gotta figure out, man. Like it took me a while to get a job, get a job at a good place, which I like. But yeah, I was able to sell myself, sell the story, sell what I want to do in my job interview. And I think it boils down to that, because what, at least in Australia, is a lot of people can get the job done, but what they also like to see is, hey, how are you as a person? Like, do you have other interests? Do you do something else on the weekends? Do you train kids for tennis and things like that? So I think just, bringing those kind of elements forward, and being very honest about it. Look, I love to cycle on the weekends. I have joined a group. I play guitar. These kind of things also actually help you score points with your employers. Certainly it did in my case. So I would say that's where you're going to find where is the distinguishing factor as to why would they want to work next to you. Because anybody can do the work at the end of the day, but whether they will like or enjoy working with you is the question. So I think you gotta start thinking about that. And absolutely, it's going to be a hot job market when you guys come in. So yeah, a lot of competition there.
Thank you.
Yeah. Everyone,
Any more?
I think, oh, Manthan, sorry.
Yeah. This is your junior and our senior, Sakshi Malani. She just got a job at JP Morgan Chase. So like, how do people do that? Like, I don't know anyone from SPJ.
Yeah.
I don't know. She's from Singapore. Do you know Sakshi though?
Sorry, who's this? Sakshi?
Malani.
No, I've not heard of her.
Yeah. No, I was just
Is
curious.
she in Sydney though?
No, she was, but she flew back to Singapore. But my basic question is like, SPGen graduates I see are usually placed in PwC and like consulting firms in Australia, but like JP Morgan or like a more exclusive elite companies are hard to get.
No, man. Look, it's hard because they've got that factor, right? They're outrightly saying in the application process, look, if you're a PR or a citizen, only then will they allow your application to go through. And that's the way, that's also how they're managing their risk. If you think about it, the risk is, look, after 2 years, your visa expires, and that's a cost to the firm, right? You become kind of like a liability to the firm. So they want to eliminate that at all. So this is an eliminating strategy. They're just saying outrightly at the application stage, look, guys, only PRs and citizens allowed. So you can't do anything about it. Honestly, you can't. Which is why I'm saying, if you've got a connection, please use it.
Are you applying for PR?
Not yet. It takes a while, and it is again, as I said, it's an unfair game. Like I see like SPGM graduates as quite well placed in terms of their skill sets, in terms of their exposure. So when we are here, we are of course contributing to the economy versus so many other citizens of the country. But the way you apply for a PR or you get that process started is you need to possess a skill set that is in a list. Okay, there's a skill list, and your skill needs to be in that skill list for you to be applying for PR. You can't just apply for PR if you are like, say, a salesman. So you have to also, if you are planning to build your career here, you have to think long and hard about it. And one of the issues with the investment like the finance roles is that none of those roles are actually in the list of skills. So you are actually at the mercy of your employer at all times to sponsor you. it's a hard process. That's what I'm saying. So yeah, and these are things I feel nobody like tells you when you're part of SPGen, that look, it's great, you get to do 2 years in Sydney, but and you can work immediately after that. But what happens after 2 years? So 2 years is when your work visa ends, and after that you need sponsorship. So for example, I was lucky, I was able to establish myself pretty well in the company, so they were willing to sponsor me. But some of my friends had to go back because they didn't have a backing. They were working in like, you know, stockbroking firms, but they had to go back because sometimes stockbroking firms don't want to apply for sponsorship for you. And even if they figure out a way, I mean, even if they're willing, there is for you to be applying for sponsorship, there needs to be a skill in the list. Okay, now investment management, stockbroking, some of these skills are not typically in the list. So you can't even apply for a sponsored, employer-sponsored visa. So that's where you kind of have to be like, you know, very strategic, or know the right people, or be in roles which kind of are at least going to get you to that PR stage. So yeah, interesting. It's very interesting thing to figure out. Takes a lot of effort and time.
So yes, I think it concludes everyone's questions. Nice to having you.
Hey,
Nice
great guys.
being here, Kunal, at this weird time as well for you. We're at different time zones, and we really appreciate you. You know, made out the full presentation and the whole slide decks with the Kahoot. I think, and plus the example that you gave of the insurance company and then how you dealt with it. Yeah, thanks for the advice. Thanks for just being there. We're all, you know, part of this investing and consulting club, and we put in a lot of effort.
You guys are lovely.
Yeah, TAMID is investment and consulting club.
Oh, lovely. No, it's a great initiative, guys. Like, I think it's pretty nice initiative of you guys to reach out. And I actually was meaning to show you what like a typical, you know, report looks like for example, for a consulting project. And I'm just gonna share my screen quickly. That's part of my agenda, actually, I forgot. But nevertheless, we can quickly just share and give you an example. And so if you guys are doing ALP, right? So ALP is part of your 4th year, correct?
Yes, next semester.
So ALP is part of your 4th year, and that project is literally what I do right now in my role. So I'm part of a consulting team, right? So what you're trying to do is you assess everything in an organization. Have you been divided? Because that's how ALP was being done for me. We had a group of 6 people. We were going to a real organization. They had an agenda, they had a scope, and then we said, look, we're going to assess your scope. For example, they wanted to increase their reach on social media. So we went in, looked at the social media platforms, and then we gave them suggestions and things around that. I think when I entered my role in risk consulting, I realized that's exactly what we do. And in front of you is like an example of what you basically would typically see as a finding in a report. So you've got a background section, and then you've got a finding section as to what the finding is. You on the left or the right, you have the implication. What if that risk is not addressed, what is the potential business implication? And then you've got recommendations. So if you were looking to actually get into consulting, your ALP project is a great example. It's absolutely a great example of how consulting is done in a normal way. And of course, on the top right, you have is a rating called high. Now that is something that is based on ratings, like a definition that you have internally in an organization. And based on how you assess the rating and how you assess that organization's risk, you kind of rate that. So I've of course rated this high because I consider this a strategic risk. So it was almost critical, but I said, let's not go critical. Let's just call it high, because people freak out if you write critical risk, and it's a red risk. So I think we discussed and we realized it's a high risk, and what we can do to mitigate it. So, you know, you've got recommendations, 2 recommendations here. And then in this section here, you've got management comments. So management will say, all right, we accept your recommendation or reject it, or this is what we're going to do about it. So this is where they get a chance to speak and come back and address and say, look, this is the plan of action we have put in, and this is how we're going to deal with it. And it normally has a due date, which is, by end of next year or in 6 months, we're going to address it, and we'll have all this done. So yeah, that's pretty much what a consulting, like a report finding would look like. So you would have, like a basic structure to your table of contents, exact summary, give a bit more flavor around it, and then we've got detailed findings section, and in here this one finding. So yeah, I just wanted to show you guys. Yeah, you have a question, Manthan?
Yes, Manthan. Hi. Thank you so
Hi.
much for sharing this. I just had a question. So like in TAMID, a lot of us are seniors and mostly we are dean's listers, like really driven group of students. So I was talking to Professor Boshra and she said we could get our own company to do an ALP with. So we TAMID group members or the fourth year students could probably potentially group up. I was curious if your department at Grant Thornton could be our ALP counterpart, or if we could work out something like that out. So it would be great to have you as a mentor and have like a group of driven students from TAMID group work on that as an ALP. Is that a possibility?
Oh yeah, I think yeah. If I understand this correctly, you're saying that I come on board as like a mentor or something like that, or yeah, or or my company is the project. Like, what's the thing?
Yeah, if your company could be give us the project for like a group of students from us, and you be the mentor of it.
Oh, that will be a bit tricky. At this stage again, this one will be tricky because yeah, this one will be tricky. I can't comment on it right now, but I will definitely explore the idea as to if that is possible. But you guys are all like remotely doing this right then, I guess, right? Okay. Yeah. I can look into it. I'll look into that and get back to you guys. Yeah?
That would be cool. I mean, what Professor Boshra has told me is like they would send an official note from SP Jain for Grant Thornton or any company to give us a project of one of the students, and
Yeah.
the ownership would be taken by the student itself. So
Yeah.
officially it could be worked out from our end, but if there is scope for this for us to do a pro bono thing, that would be truly wonderful.
Yeah, I mean, I would say I'm trying to look at where will you get more value. So the thing is, the business model is a little different. So here we do this for a living. So if you are trying to solve a problem, which is what consulting is about, you will solve a problem that Grant Thornton's dealing, not the clients of Grant Thornton. Now, that I feel might not be like a great exposure. It might be an exposure into how Grant Thornton works, but I would say there's more value in having direct, like working with a company which is in a different space altogether, and they're struggling with, say, increasing their reach on social media, things like that, because we won't have those kind of problems because it's quite big. We're quite big in terms of that, and we've got resources. So if for that matter I do manage to speak with them, I'm not sure what kind of like a scope project will come out of it. So I can look into it, but I would say, like working for like a hotel, like I did a project for one of the hotel groups here, and our objective was to, increase, how can we increase social media reach? And so we had 3 marketing students in my team. I did finance, so I was that, and there was my entrepreneurship. So I mean, we came together, we collaborated. Somebody looked at the finance. I identified like how much is gonna the cost benefit analysis of pay per click, reach, how much do you want to reach out, what is your budget, and things like that. So I would say, yeah, I mean, I'll think about this and get back to you. Yeah.
Sounds great. Thank you.
All right, guys. I think you guys have been patient and given a lot of time. But yeah, it was good chatting. Had fun. Let me know if you have any questions. Yeah.
Thank you so much, Kunal, for coming in today. We're so glad to have you. Thank you.
Thanks, and happy Diwali, everyone.